Internet financing is a superset of the e-payment. As a matter of fact, internet financing, we also call it electronic financing, composed of several business scenarios. First of all is the payment and the payment settlement process. And then the next business scenario will include internet lending, or so-called microfinancing. These would provide the lending and credit services to average consumers and small businesses. The third business scenario will include the management of wealth, or the management of internet funds in the internet platform, as well as the so-called data information processing mechanism. And finally, but not last, is the functional aspect of the electronic finance, which will include the mobile payment methods, the electronic wallet processing, as well as the financial tools sales. That will include, say, for example, internet funds sales, insurance product sales, as well as many of other financial derivative products that are developed and sold across the internet. Well, it is because the finance industry has been a very classic, well-matured and well-regulated system, especially in China. The entire banking and financial services sector are heavily regulated. However, that leads to the fact that the regulations falls far behind of the latest innovations in the internet and the technology evolution. So what is currently happening in China is that the financial innovation similar to what took place in the United States in the 1980s is also taking place. That is found upon the foundations of the internet technology, as well as data processing technology, that will allow the customers and the average consumers to have easy access to the near de facto market rates, also have access to financial products that bears a much higher entry barrier before. Well, average consumers now are entitled to a higher rate of return on internet finance products. They also enjoy the flexibility of good liquidity. And in addition, the lowered entry barrier that would allow the massive quantity of small business and also small volume wealth owners to participate in the internet investment scenario. For small business, it is extremely important for them to increase the capital efficiency, as well as gain access to operation funds to expedite the expansion of their business. Traditionally, the entry barrier to the indirect funding or indirect finance in the financial sector has always to go through commercial banks or retail banks. And also, it is extremely hard for small business to gain access to direct financing in the business sector. However, internet finance, or the so-called technological innovation in the finance sector, paved the roads for small business and individual consumers to gain access to microloans, to internet lendings, or internet credits. That will allow them to do a couple of things. One is to finance on the micro capital level, also performs supply chain financing, also low cost of entering into the capital investment market, such as money market funds, as well as many of the innovative internet financial tools. This would even out the competition ground that race used to be uneven for the small business owners and the average consumers. The innovation of the electronic financing also helps to even out the competition ground between large enterprises as well as small entrepreneurs.